welcome to FinTech Diary. The world of FinTech is evolving constantly, and we at FinTech Diary try to map these changes for you. My name is Amol Dethe, and my guest for this chapter is Dilip Modi. Dilip is the chairman and group CEO of DigiSpice Technologies, and founder of Spice Money. Dilip, glad to have you.
Glad to be here, Amol. Thank you for inviting me.
Thank you. So before we begin, Dilip, obviously we are aware about what Spice Money does, what is the goal that the Spice Money has. But just to begin with, give us a brief for our audience in terms of what exactly is Spice Money doing, what is the problem that you're trying to solve specifically, and what is the market that you're catering. Dilip, please go ahead.
Thank you, Amol. So basically at Spice Money, the problem, Amol, we're trying to solve for is lack of access to formal financial and banking services to consumers and small businesses operating in rural, semi-urban India. Effectively, one big drive that the government has had over the last 10 years is to get every citizen to open a bank account. Now, either there's a savings account or a current account, and ultimately transact with that account. One of the things we realized is that when a lot of people's accounts got opened, there weren't enough bank branches or ATM points where the people could go and transact with the bank account. So using the India stack, specifically the Aadhaar layer of the stack, we have onboarded over the last 4 years, nearly 1.3 million small merchants who we call Spice Money Adhikaris on our app or web product. And basically they become like a banking point in their community. We've served close to 22 million customers a month. We've served over 130 million customers to date. These are consumers who today, struggle to get to a bank branch because of the distance involved, cost, time, effort involved. And the idea is that, what they would expect from a bank branch, can they get it at the local merchant? Now we're playing into many things here. It saves on cost, time, effort if he has to go to his local merchant to withdraw cash. So we've seen that Aadhaar-enabled payment system, Amol, which is a big enabler of this, where all my Aadhaar is seeded into my bank account. So effectively, a person authenticates himself using Aadhaar. The money flows from the customer's account to the merchant's account, and the merchant pulls out cash and gives it to the customer. And the bank pays an interchange on it, and we share it with the merchant. So effectively, it's a win-win-win model for the bank, the platform, and the merchant, and then eventually for the consumer. So Amol, one of the biggest problems we've solved for now is extend the reach of ATM points in the country, where from 2 lakh points, we've now gone to 25 lakh ATM points in the country, enabled by the India stack.
What is the major demand, Dilip? I know, with digital proliferation of the digital, specifically the DPI that we have, and obviously the Jam Trinity, the whole banking space has evolved, and the transformation is incomparable or unmatchable to, in fact, any other country in the world. But what is it right now happening? Because if we look at the basic base of the financial inclusion, which is the opening bank account or something like that, that has happened. Acquiring customer is just a matter of few minutes, whether you are living in a Bombay or Delhi or maybe a hinterland, right? So what is now happening? What is it that the fintechs are doing with all these rails which have been already laid?
Yeah. So Amol, now what is happening is, you're absolutely right that with all these rails, what is the next focus? So the focus is to now look at specific products within the financial services space and solve for moving consumers from unorganized markets to more organized markets. So let me start with credit, right? A lot of focus is being now driven across the fintech space to how to enable good credit to consumers and small businesses. We have a huge unmet credit demand in the country. Specifically, if you look at the MSME sector, it's billions of dollars of unmet credit demand, 63 million MSMEs in the country. 60 million of these are micro enterprises, which are small retail merchants. And the opportunity, Amol, that now fintechs have, for example, who are focused on this, is how to solve for giving them access to formal credit. The same thing you could take to savings, you could take to wealth, you could take to insurance. So I think on the back of these horizontal rails that have been rolled out, the idea is how do you go vertical by vertical product wise to solve for under penetration of formal access, right? So whether it's insurance, whether it's savings, whether it's investments, or whether it is credit, this is the next big wave where a lot of fintechs in each of the verticals are building out. That's point number one. And I just make 2 points. The second point is, I think if we look at growth or what you call financial inclusion,
Hmm.
We have to look at it through both the lens of digital and physical, which
Okay.
basically means that there is a self-serve part of financial inclusion, and then there's an assist part of financial inclusion. What that means is, if I want more people to get access to formal financial products, there
Hmm.
is technology can play in terms of them using their smartphone to become aware of products and to get access to them and to buy those products. But there's a huge part of India, especially rural and semi-urban, who needs assistance. And
Right.
this is, you need to be able to build a viable economic model outside the bank branch,
Hmm.
where you reduce the cost of branch banking. The way we reduce the cost of ATM operations, how do you reduce the cost of branch banking to
Hmm.
be to leverage the larger merchant ecosystem to start unbundling some of the branch products and make them available at merchant points with the relevant guardrails so that you can provide access to more consumers of what otherwise they would expect to get from a traditional bank branch. So I would say that, if we have to solve for financial inclusion, we need to look at product wise strategy, and we also need to look at a combination of how do we solve for self-serve but also for an assist model.
Now, since your major focus is rural India and you are catering to that particular side of business, tell us more about it. Are you making decent business out of it? And is that business that you're making with EPS, few cents that you're earning with per transaction, is it a decent revenue pool or a profitable pool for you, Dilip?
So Amol, the answer to that is yes. Uh,
Mhm.
I think rural India, where urban India was 20 years back, semi-urban India is getting there today, and rural India will get there soon. I think there's a lot of money that is now beginning to flow into rural India. I think keeping other aspects aside of the different agri, non-agri impact of the businesses, the mega trend is basically around uplifting the income levels of businesses operating in rural and semi-urban. So I would say that there is money in rural. That's point number one. If you look at Chandan accounts, 50 crore accounts opened, over 2 lakh crore of deposits in the account. So there's money in rural, right? The question is, how do you make the unit economics work, Amol? And that is where we see that in APS, the unit economics works. So we've been a positive unit economics company. We've been positive on EBITDA and bottom line. Because we are sitting in the banking value chain and playing an inherent role of reducing the cost, right, of the banking operations, by definition, we are able to increase the base of consumers that the banks can reach out to. So, making a little bit of money, like you said, per transaction, but just the number of transactions growing makes the economics work, Aman.
Can we safely say now that when the rally specifically for the profitability and sustainability is growing significantly, or at least the investors and fintechs are talking about it, not just you, but the fintech companies specifically operating in payment space, you know, can see this rails as one of the profitable, way, and to reach their destination, which is the profitability and sustainability.
Yes, I think there is a great opportunity for all fintechs
Yeah.
uh, to see that how do they build a sustainable business. I think for that it's
Hmm.
very important to make the unit economics work. And I think, Amol, there is an opportunity because there's a huge underserved and unserved market. And therefore, if you build the right model to serve, there's no reason why you can't achieve sustainable, profitable growth.
Right. Now, since you operate in rural India, one more question I would like to ask you, Dilip, is, and rural is not easy to crack, specifically when there are so many languages, uh, oh, there is this famous line, right? Ghat ghat par badle pani, kos kos par wani, which is actually the India which changes every miles and kilometers. So how do you actually make business and ensure that your product, your model is reaching to every village and every town, and every adhikari of your company is carrying the same thought? Are you opening branches? Are you operating in absolutely virtual manner? Are you operating in absolutely digital era? How do you actually mix that and match that?
Yeah. So that's a very important question, Amol. So in fact, we have a phygital model, both physical and digital. What I mean by that is, we've appointed in almost every district of India local partners who are
Hmm.
micro entrepreneurs themselves. You can call them distributors, and effectively they help us onboard merchants who function as BC points in the community. And so we do our diligence to onboard partners and work with them to do diligence to onboard merchants who can function as BC points. And then once they're onboarded on our platform, a lot of the engagement is digital with them, but we combine it with a physical layer of a beat system on the ground, where we have our sales organization mapped to the partner, the distribution partners, and they have a team which is mapped to the retail merchants. So effectively, we have a chain that works down in rural India, because one of the things we realized in Amol in rural, and microfinance has shown the way, that you do need that physical engagement on the ground, right? Because at the end of the day, there is that need for assistance. And so a pure digital model in itself will not work. To be as asset light as possible, but definitely to solve for rural, let's say, credit, you can't just have distribution of credit in just a simple digital model, right? You have to do assessment of income levels, variability of cash flows. There's data which is not available digitally, so certain things you have to validate from the ground. So through a chain of our sales organization to the distribution organization to the merchant organization, and then finally to the consumer, we have these different layers who works to be able to validate data on the ground, and then use digital to more authentic, to more verify some of that data, or to cross verify. But effectively, if we have to work more in rural India, we see a combination of having physical feet on street as well as strengthening our digital platform to that we're able to use the benefit of people and technology and to serve communities at large, which go deep into rural. Now, when you talk about language, one of the things that we realized in this combination of people and technology, that a lot of these distribution partners and the sales team we bring is state by state, region by region, district by district. So the way we work on it is, whether it's our salesperson, whether it's the distribution organization and their sales team, or whether it's the merchant, all three are actually local, right? So we have three layers of local people serving the local consumer. So while digital we can solve from a multi-language point of view, the idea is that we have people on the ground who the consumer in that community can trust, because they work in that community, they live in that community. So the goodwill that the consumer or the small business operating in rural shares with the local merchant, who shares with the local distributor, who shares with our local salesperson, that then works together to serve the consumer locally. So that's the model that we've looked at, Amol, where effectively, market by market, we look at products that will work for that market.
Yeah, absolutely. I think you nailed it. In fact, it's quite meaningful. In fact, it looks like a typical Atmanirbhar Bharat, or maybe a local value chain, because you do not need to go out of your village and find out something different. Everything is available there. One more point here, Dilip, is then when you're trying to create this whole ecosystem, specifically for this rural India, what kind of demand do you see? I mean, or what kind of products are getting more response specifically from a rural India?
So our focus, Amol, is on two fronts. One is deeper penetration of financial products, formal financial products from the banking sector. The second is digitization, right? Which helps us in terms of being able to also provide for more formal products into the economy. So I think from a demand point of view, I think there's a huge demand, like I said, for two main streams of products that we look at: formal credit and formal savings. And I the numbers are well understood in terms of the demand that's existing. The key question, I think, Amol, is not so much the demand, but the business model where you can solve for micro credit and micro savings. Because the amount of savings and the amount of credit, it's still small per borrower or per saver compared to the urban economy. So I think, Amol, the key question is that when you have lots of small businesses or consumers, at an aggregate level, the demand pools become significant. So how do you aggregate and cater to that demand is the real question. But I think the demand for credit and the demand for formal savings is very much there. For example, if I look at B2B commerce, merchants are going to come online and start ordering products online. They're not going to wait for a traditional cash and carry model. Now, when they start buying products online, they will want credit, right? Working capital. So I think there is a huge need that as merchants go digital, how do, like when Flipkart started, there were a lot of fintechs or people who came in to lend to sellers on Flipkart or Amazon for that time. So I think with initiatives like Open Network for Digital Commerce, a lot of merchants in rural and semi-urban may also see the opportunity to come online faster and get access to credit. So I would say that across the board, there's a huge demand. The question is, can you serve it in a viable way?
I think digital one, Dilip, I think, and that's a need. I think merchant specifically credit is quite interesting, and everyone is trying to focus on that. So that looks interesting. So Dilip, tell me something about your finances. Are you profitable right now? What is the total fund that you have raised till now? And are there any plans also to raise funds? Give us some of your financial, introduce us to your finances.
Yes. So Amol, DigiSpice Technologies is a listed company.
Yes.
We had a bunch of businesses at DigiSpice. Our background, as you know, is telecommunications. So we have Spice Telecom earlier. We listed that company as well, and then we exited through a strategic sale. DigiSpice Technologies historically was Spice Mobility. We were in the hardware business, which again, because of industry dynamics, we moved out of and started focusing more on services than hardware. So we went from infrastructure to hardware to services. So within DigiSpice Technologies, we had a bunch of service businesses where we were working with telecom operators in the region to build products and services for them. Spice Money as a fintech got born in DigiSpice Technologies, spun off as a subsidiary. Earlier this financial year, we took a call to exit all our non-fintech businesses, Amol, out of DigiSpice Technologies. Now, DigiSpice Technologies is a pure fintech company, and effectively, Spice Money is the main business that is housed under DigiSpice Technologies, something that we informed our shareholders at the AGM we had in September. And so now, when you look at the finances of the company, Amol, the finances of DigiSpice are effectively, what are the finances for Spice Money?
Okay.
So Spice Money, which is the fintech business under DigiSpice, is the business of DigiSpice. Now, if you look at our numbers, while everything is in public domain, we are profitable, right? I would say profitable in the sense we are more like a break-even company. Our goal is to drive operating leverage. It's like if we stop introducing new products and scaling the network, we can make a lot of money just in the bottom line point of view. But we are investing a lot of our internal accruals in terms of gross margin and whatever we save on EBITDA back into building the people, technology, infrastructure side of things. And so for us, the key is unit economics. And like I said, a lot of our products that we do, whether it's ATM payments, collections, all of this, we try and keep positive unit economics. So effectively, our idea as a listed company is to drive operating leverage, drive innovation, and eventually drive both healthy CAGR as well as bottom line growth.
Sure, noted your points, Dilip. Now let me slightly shift your focus to the overall fintech industry. We partly discussed that one point, but obviously we are going through a revolutionary era right now. We all spoke about funding winter, and funding winter was quite aggressive, quite shivering. Till in fact now a couple of fintechs are finding it difficult to raise funds. But the investors are carrying one definition or one side of approach, that if there is a value in any fintech, they're ready to sign checks. So one, I just want you to tell us your perspective in terms of how do you see the current funding situation for the fintechs. You are a veteran in the industry and you have already exited and running a different business, which is a listed company altogether. So if you would have to start a fintech company now, do you think that it would have been easy for you to raise funds? How do you see the whole funding market right now, really?
So I think this is something that everyone knew and everyone spoke about, which is ultimately the goal of business is to make money, right? So the idea is that with tech-led businesses, obviously the focus has been to creating habits, driving scale, and then eventually driving profitability. So it's a journey, right? And that's why you have venture capital followed by private equity, followed by capital market investors. You know, I think things like funding winter and all that, Amol, is something that keeps coming and going. I think the key issue is that we as an economy are on the rise. I think we are one of the biggest fintech markets in the world. I do believe that, you know, fintechs have a true opportunity to, build very strong, viable, financially attractive, accretive businesses. If you look at the banks in our country, look at HDFC Bank, look at many of these banks, one of the largest banks in the world, with all the consolidation that's happening in the banking space, I feel like, more, fundamentally, if you build your business with good, sound fundamentals, right, in terms of positive unit economics, if you keep your cost efficiencies, I think there's enough scale available in every segment of the business to be able to show substantial returns to investors. So I think, anyone operating in the fintech space in India today, there's a unique opportunity if you can keep your basic fundamentals healthy. I think there's enough scale, enough tailwinds, Amol, in the country, which will drive adoption and growth. So I just feel like, uh, you know, it's funding winter more for people who do not have yet not figured out their fundamentals, right? But if you figure out the fundamentals, there's enough scale and enough money to be made, and there's enough money in the world. So I would say that, if you have a sound business, money will find you.
Yeah, I think that's a great line. There is enough money in the world, only if you know how to get it. That's a interesting one.
Say that, if you're doing the right things, they'll find you.
Yes, yes, absolutely, absolutely. Noted your points, Dilip. So I think I have come to a conclusion right now. I mean, no direct statement as such, but if you could tell us, what will make fintech successful going ahead? They struggled a lot making money out of their fintech, out of the payment model where the fintechs are operating. The easiest way was making money was from the credit, but again, there are a lot of shares. You have to do a lot of collaborations and the partnerships. And after RBI's guidelines, it has also become a little different for them to make money. It's not that they cannot make money into credit, but what is your one bold statement? What will make fintechs profitable? How will fintechs make money going ahead?
I think, the way I would like to look at this is, every fintech company or every company in the financial services space needs to define its target customer.
Hmm. Hmm.
What is the key product that it has in mind to serve that customer, and what is the economics associated with that customer segment? And as long as they can ensure that their cost to serve that segment is in line with what that segment can afford to pay, because I think if you add value, eventually, you'll figure out a way to make money from that segment, right? So I think that, as long as people can find their space, doing everything for everyone at scale is a very different business model to chase, and only few companies can succeed at that. So really, for fintechs to make money, it's very important for them to, define their segment and create the right economic model, to serve that segment, which makes positive unit economics. And I think, to me, I think the biggest excitement is around numbers. I think today, India is a country of 1.4 billion people, Amol. I think the numbers are beginning to count. And,
Yes.
and therefore, the question is that if you can build the right economic model, there's enough scale for you to make substantial money. So I would say, sorry, I'm repeating myself, back to basic fundamental. Like my grandfather used to say, build businesses in the most traditional possible way. You think technology, but build business, economics in a very traditional mindset way, where there is P&L cash flow on a daily basis.
Sure, absolutely. Noted your point. Just last one specific question to Spice Money. Where do you see yourself in next 2 years? What are the changes that you see in Spice Money? What are the new products that you're going to launch? What are the ideas? What are the new objectives that you're going to implement specifically in Spice Money over the next 2 years, Dilip?
So Amol, we are very privileged to have built one of the biggest, kind of interoperable ATM banking networks in the country using technology, having onboarded over 1 million small entrepreneurs on our platform. I think over the next 2 years, our opportunity is to see how we can drive more products,
Right.
specifically in the banking, which means savings and investments and the credit space, with these entrepreneurs. And I think that'll be our focus in the next 2 years, right? So how do we move from, extending the reach of ATM banking from 2 lakh to 25 lakh points to now extending the reach of bank branches? So how we can unbundle saving and credit products from the bank branch and deliver it through our million points across 250,000 villages and 6,500 small towns. So that's our goal for the next 2 years.
Sure, Dilip, and I think wish you the best for that goal. And thank you so much for sharing quite meaningful insights, specifically not only about Spice Money, but also your view specifically on the fintech industry, fintech segment. So thank you so much for being part of Fintech Diary and sharing your views, Dilip.
Thank you, Amol. It was a pleasure interacting with you. It's always fun talking to you, and thank you for having me on your program. Thank you.
Thank you, and hope to see you soon.